One of the biggest misconceptions in the world of retirement planning is this. If you are under the age of 59 and a half, you cannot retire because you cannot get access to your 401k or IRA plan. Nothing could be further from the truth. Now, it is true. If you try to take money out of a 401k or tax-deductible IRA or any pre-tax account for that matter, prior to 59 and a half, there are times when there will be a 10% excise tax penalty is what I like to refer to it, which again, no one wants to pay an extra 10% in taxes if you don't have to. So how do we avoid that 10% tax penalty for those of you who do want to retire early? And folks, this comes up all the time. And what I'm about to show you, we have done these numerous times, so we understand this strategy I'm getting ready to share with you, which is actually compliments of the United States government, and it does work. Let's first of all imagine that someone has, and this we call this pre-59 and a half planning, age 59 and a half. Let's imagine that a person has $800,000 in their 401k plan and they want to retire for various reasons. You know, we're talking about the boomerang effect now, and we're talking about people maybe wanting to take care of their grandkids who they're having to take care of, or take care of mom and dad. Or a gentleman the other day just said, I am so burned out on work, Tony, I can't take it anymore, man. I got to get out of there. Then that might be you. Maybe you've been offered a buyout. Whatever the case, we can analyze this accurately. Folks, I've got 19 full-time employees, have 2 tax-certified people on staff. We know this world very well. We understand what we're doing. So anyway, let's say this person has $800,000 and for whatever reason they want out of work, but they've heard about this thing called a 10% excise tax penalty. Now, first of all, one thing they could do, this is the key. If they terminate service at the age of 55 or older, and if they so choose, they can leave the money in the 401k with their current custodian. In other words, don't roll it out to an IRA. Again, you have to be 55 or older when you terminate service, but you could draw out money anytime you want out of that 401k without a tax penalty. But you might be sitting there saying, well, Tony, I want to go over with you guys. I know you got products the 401k doesn't have. I want your expertise in planning. I want it local. I'm tired of dealing with these 1-800 numbers. I want to move that 401k over to you. I know there's no taxes to move it over. I know you're going to put it in an IRA. But what happens if I draw money out of there during this phase between 55 and 59 and a half? Well, if we just take money out of an IRA, there is going to be that 10% excise tax penalty. But there's a way to avoid it. It's called a 72T election. Now again, this is in the government's code. The IRS code is perfectly legit, perfectly legal. You got to know what you're doing on this. But here's how this would work. So somebody comes to me, and we've had clients do this. I know the interview leading up to this particular segment, this is what the client did. We would take that 401k, roll it over to our custodians at Tony Walker Financial. We would put it in that beautiful split IRA concept that we're known for, and we would carve out a portion of that money to go into what's called this 72T, all right? Now, the government tables will tell us how much we can take out, and if we follow those government tables, we will not have to pay that extra 10% tax. So let's say we've gone through a retirement plan with this particular individual, and now I'm just pulling names out of the air here. Obviously, they can't take Social Security because they're only 55. Maybe they do have a small amount of a pension starting. Let's say that's $20,000 a year. Okay. Maybe they're even going to work part-time, do something on the side that they enjoy doing. But then they say, well, Tony, I need more income than that. My part-time wages and my pension aren't going to cut it. Well, maybe the 72T, based on the calculation, pays another $20,000. And what we do is we carve out an amount of money designated to pay that 72T. What you have to watch and what you have to be careful of, and we even have to watch the companies because sometimes they don't code this properly for the IRS. It has to be what's called systematic distributions for at least 5 years or age 59 and a half, whichever is longer. So again, let me back up again. You move it over to us. You want us to handle it. You want the 72T. It is not going to be quite as flexible if you left it at the 401k. It'll still work. It works great, but you just have to remember there's some give and take on this. So in this example, let's say that was the calculation. You would get $20,000 from your pension and $20,000 from the 72T. Obviously, it's going to draw down some of your IRA because we have to make those payments once we start them. There's no additional excise tax. Whatever the taxes are, they'll be. We'll calculate that for you. Then after age 60, the balance of that IRA, whatever we've done in terms of our split IRA, is fully accessible. So this is the kind of planning that gives you flexibility. It could put you in more control, and yes, allows you to do some things that you thought you couldn't do. So that's you right now. If you're sitting there saying, Tony, I didn't realize I could do a lot of these things you keep talking about on this show. Why don't we at least talk? It doesn't matter your age. If you're basically over the age of 50, that's kind of our demographic, all the way up to 85, it doesn't matter. But if you're retired or you're approaching retirement, we need to talk. To learn more about Tony Walker Financial, why don't we do this? Let's start off with a phone call. We call it the free 10-minute fiduciary phone call. Just log on to TonyWalkerFinancial.com or give us a call anytime at 877-499-9255.
Thanks for watching. We hope you enjoyed that video. If you'd like, check out these other clips. And be sure to hit that like button and that subscribe button for more videos.